MacDonald, the CIO at Allianz Global Investors. Let's hear out their exclusive conversation.
I think many of the global investors and the regional investors have lost some of their enthusiasm for the speed of reform in India, and that has caused some outflows from the country. And I think some of those outflows have gone towards Indonesia this year, hence the outperformance of that country. So I think there's a lot of real focus on how that reform goes, how the sales tax moves through the upper house in particular. There's a lot of focus on that. But at the same time, I think it's quite healthy that the expectations have come down a bit, because the expectations were probably a little bit unrealistic and too optimistic towards the end of last year about India. So I think it's quite healthy that the evaluations have come down to a more normalised level.
Most important policy statement from the Indian government is the budget, and that's just a few days away. What are you expecting from the budget?
Well, at the moment, our expectations are not particularly specific. It's much more looking and seeing the path of reform as we go through the next year. And in particular, as I say, watching to see how that sales tax gets through the upper house.
Okay. Well, there are murmurs that the short-term capital gains tax will be expanded to not just 1 year, but 3 years. In other words, equity investments could get taxed a bit more than they are currently. Will that be a major negative for you?
All taxation is on the margin important to us. So yes, it's on the margin, but I think really we're much more interested in those big issues of freeing up infrastructure, making foreign investment easier into the country, and allowing easier flow of goods and services around the country. Those are the real major things. On the margin, what's happening to taxation is interesting, but it's not the most important thing in the medium term.
Would the fiscal deficit be a very important number that you would watch out for? The government ought to have reached 3.5% of GDP as the fiscal deficit target last year. They pushed it to this year. If it's not achieved in the 2016 budget, would it be a disappointment, the 3.5% number?
No, it's not a particularly distressing number when you look at it in global terms, and when you look at some of the deficits that we're surrounded by in Europe or even in the US. Fiscal deficit of that size is not alarming, but at the same time you do like to see the control. And I think one thing that we have been very encouraged by as other investors has been seeing stronger control of the fiscal situation and also monetary control within India. So we do want to make sure that is maintained and that credibility is maintained as an overseas investor.
When you say the monetary control is maintained, you would want the Reserve Bank to pursue its inflation targeting? Is that what you're expecting?
Yes, because there is an inflationary bias within India, which has been under much better control recently. So you want to make sure that is maintained. Speaking from the UK, which also has an inflationary bias, we need strong monetary management.
Okay. Well, to come back to the earnings issue, we've been waiting for earnings to reach double digits for practically the past 2 years. Every time we push it by about a quarter or two down. How disappointing was the recent earnings season?
Well, it has been disappointing. However, when you look in a global context, there's been disappointment really widespread, and India is only marginally worse than average. So you've seen disappointment throughout the earnings season in the US. Not huge, but on the margin, there have been misses at the revenue level, and you've seen that in India too, that revenue has been slightly disappointing. However, the corporate sector has been very strong globally at keeping its margins quite strong, and that's also been the case in India. So you've seen the EBITDA missing less than revenue, so that means sort of good margin control.
Okay, well, some sluggish trend coming in on the mid-cap index, so that one's down around 0.3%, and we have the advance decline ratio, which is now in favor of the declines as opposed to the advances. Previous stocks flat to sluggish at this point in time. It's a wrap in trading out, but stay tuned.